Good evening, one and all present here, virtually present here. Myself, Dodunguda Patil, Secretary of CICASA Bengaluru. And I would like to welcome you all to a webinar on smart approach to articleship. I would like to quote one quote. It's not about the quantity of hours, it is about the quantity of work. And this is the quote for the day. And now I'd like to welcome our CICASA Chairman, CA Panindra Gupta, sir.
Thank you, Patil.
Welcome to the session, sir. And now this is the time to welcome our today's speaker. That is none other than CA B S Mylar, sir. And yes, sir. Heartily welcome to the session, sir. With his CA B S Mylar, sir, is a partner of Nagesh and Mylar Chartered Accountants. And sir has qualified as a chartered accountant in 2009, and fellow member of Institute of Chartered Accountants of India. And sir has a rich experience in the field of indirect taxes, more than 10 years. And sir is a regular faculty for certification course on GST conducted by the Institute of Chartered Accountants of India and other institutions as well. Sir has written articles on various professional journals, and one of the GST faculty identified the Indirect Taxes Committee of Institute of Chartered Accountants of India. And is also involved in a drafting technical guide on annual return and GST audit. And GST audit published by the ICAI. With his brief introduction, I would like to welcome our today's speaker.
Thank you.
Yes, sir. Welcome, sir. And now I hand over to CA Panindra Gupta, sir.
Thank you, Patil. A very warm welcome to one and all present virtually for today's workshop on QRMP scheme, that is quarterly return, monthly payment scheme, and effective way of doing 2A or 2B reconciliation. So GST is goods and service tax, which was introduced with the concept of one nation, one tax, but I don't know how far it is one nation, one tax. So it is almost 3.5 years over. Every day we are witnessing so many changes and notifications. So here is an expert faculty, a very good friend of mine, who can help you to understand the concepts better for your practical training. I, on behalf of CICASA Bengaluru and entire managing committee of Bangalore branch of SIRC of ICAI, I wholeheartedly welcome today's speaker, CA B S Mylar, for these deliberations. I welcome you, Mylar.
Thank you, Pani. Thank you, Patil.
So before we hand over the session to Mylar for today's session, so few announcements. So our managing committee will be changing changing, and election of new office bearers will be there in February 19th, and post that we'll be having cultural program on 21st of February, and also we are planning to conduct sports which includes various games like cricket, volleyball, and many others on March 13th and 14th. I request all of you to kindly make use of these events and make the events a grand success. So over to Mylar for today's session.
Thank you, Pani. Thank you, Patil. And thank you, CICASA, for giving this opportunity to share my knowledge in respect of QRMP scheme, which is recently announced. And it is effective from 1st January 2021. Is PPT visible?
Yes, sir.
Yeah, okay. So as the name says, it is quarterly return, monthly payment. So quarterly you need to file the returns. But the payment you need to do every month. So government is okay in respect of quarterly filing and compliance, but the payment, because it is involved revenue and there's a lot of expenditure the government is incurring. So to manage that, so government is not okay with quarterly payment. So monthly payment has to be done. We'll see how it has to be done. They have given some options, and deemed value, you can make a calculation and make the payment. Even a pre-filled Challan is going to generate for the purpose of a prescribed payment, which is notified for the purpose of monthly payment. One of the major concern which all the taxpayers or taxable person which they had in respect of MSMEs. So the turnover is very less and compliance cost is too high. So every month there requires a lot of preparatory work like downloading 2B or 2A and matching with purchase register and following up with the supplier for uploading the credit. And there were so many other requirements. And monthly you need to file GSTR-1, and again you have to file 3B, and again follow up with the vendor for the updating their GSTR-1 was a very big task which all MSME used to face. The big enterprises, they will have enough resources, they'll have enough money to handle all this compliance burden. But if you take MSMEs, the compliance cost is very high. So GST Council with the experts, they have decided to have quarterly return and monthly payment. If you see what is QRMP scheme, so as already told, it is quarterly return, monthly payment. Even though they have given the option to file quarterly GSTR-1, quarterly 3B for the persons whose aggregate turnover during the preceding year less than 5 crores. If your aggregate turnover in the preceding financial year is less than 5 crores, then instead of filing monthly GSTR-1 and monthly 3B, you can go for quarterly GSTR-1 and quarterly 3B, and payment has to be done monthly. And one more thing, in the current financial year, if your previous financial year turnover is less than 5 crore, but by chance current year turnover, once it is crosses 5 crore, then you are not eligible for this scheme from subsequent quarters. In the subsequent quarter, you need to go for monthly payment and monthly GSTR-1 and monthly GSTR-3B. Okay. So how to identify whether a particular taxable person or a particular registered person, whether he can opt for this scheme, that is QRMP scheme. Whether the person is eligible to take this scheme or not is based on his previous year aggregate turnover. We all know what is aggregate turnover. We will just take some slides to explain what is aggregate turnover also. But right now we just understand aggregate turnover in the preceding financial year is very, very important. Your aggregate turnover in the preceding financial year is less than 5 crores, then you can opt for this scheme. Then at the time of opting the scheme, you should not have any pending returns. If you have any pending returns like 3B, then system will not allow you to opt for this QRMP scheme. At the time of opting the scheme, you should not have any backlog in respect of GSTR-3B. If you have any backlog, then system will not allow you to opt for this QRMP scheme, and you will continue to be in monthly scheme. If you have seen in the last quarter, department has sent various mails to the registered email ID stating a default scheme which system has opted for you. In the various schemes where they are opted, if your aggregate turnover is 5 crore, the system is automatically marked as quarterly filers. In respect of GSTR-1, if the turnover is less than 5 crores, your GSTR-1 for a less than 1.5 crores, it would have been quarterly. If it is more than 1.5 crores, it is monthly. If your turnover is less than 1.5 crores, still if you opted for monthly, the system has defaulted you as monthly payer and monthly filer and not quarterly payer because of the past behavior and what options you have chosen. Based on that, the system has intelligently opted for some persons opted this scheme and some person not opted this scheme. And surprisingly, we have come across some assessees where their turnover is less than 5 crores and they were used to file quarterly GSTR-1, but system has marked them as monthly filers. Then we realized that because previous month, October and November month, 3B has been filed belatedly. When there is a belated filing of 3B, the system will not allow you to opt for QRMP scheme, and the compliance should be proper, because if your compliance is not there, system will not give the benefit of QRMP. You have to go for a monthly filing. Okay, so when you can opt for scheme, if you take an example, you take next quarter, that is April to June to 21 quarter, you can opt scheme by 1st February till 30th April, 1 month before the quarter and 1 month after starting the quarter. For example, April quarter starts from 1st April, but you have a time till 30th April to choose the filing status. Either you want to QRMP scheme, you can select. If you don't want, you can change selection for a next quarter. But the only thing, at the time when you select for this option QRMP scheme, when you want to select for this QRMP scheme, you should not have any backlog or due of filing 3B. Okay, if for example, today I am opting for quarterly scheme, then I should have filed my December 3B by the time when I file, because December is due, but January is still not due because the due date has not approached. If I have filed my December 20 return, then I can opt. If my December 20 GSTR 3B is due, then I can't opt for this scheme. I need to file my GSTR 3B first, and then I can opt for QRMP scheme. Okay, we'll take a small example to understand. Aggregate turnover for the financial year 1920. So this is Karnataka 2 crores, Tamil Nadu GSTN 3 crores, Kerala GSTN 2 crores. Total aggregate turnover is 7 crores. Because this it used the word aggregate turnover. You know, aggregate turnover is pan-India basis. If your aggregate turnover pan-India basis, if it is less than 5 crores, then you are eligible. If it is more than 5 crores, then you are not eligible. We'll take a second situation. As per 3B, 4.5 crore. As per books, 5.1. See, aggregate turnover is a turnover by an SSE, not turnover declared in 3B. See, aggregate turnover is not what you declare, what you actually supplied. So if you have supplied actual turnover, actual supply as per your books is 5.1 crore, then your aggregate turnover is more than. So it does not use the word aggregate turnover supplied in 3B, it's used the word aggregate turnover. Whether you disclose in 3B or you're not disclosed in 3B, once your aggregate turnover is crossing 5 crores, you cannot opt for this scheme. If you take example 3, Karnataka GSTIN 2 crores, Tamil Nadu GSTN 1.5 crores, Kerala 1 crore. Total aggregate turnover of pan-India basis is 4.5 crores. Because aggregate turnover is only 5.5 crores, which is less than 5 crores. In case 3, you will be eligible to opt for QRMP scheme. Next, case 4. We'll take an example. In aggregate turnover in the financial year 1920 is 4.5 crore. So you met one condition, because previous year aggregate turnover is less than 5 crores. But if you take current year, that is 2021 till December, you already crossed 5.1 crores. So once you cross this 5.1 crore in the current year, in the next quarter, that is January to March, you are not eligible for QRMP scheme. So whenever you opt for the scheme, be careful. It is not what you declare in 3B, because system will designate it in such a way that system GSTN will take care only your return turnover. So whenever the client is in borderline, you have to be very careful. For example, 4.8 crores. So you might not have not declared some exempted turnover. You might have non-GST supply which you are not declared. So you have to be very careful in respect of borderline item. Even though your aggregate turnover as per 3B or GSTR-1 is less than 5 crores, so system may give a default option of quarterly filing. But if your actual supply is more than 5 crores, then you are not eligible. You have to be very careful at the time of selecting quarterly return, and you have to ensure that in books and actual turnover is not more than 5 crores. Okay, to understand it is better. It is very important because of some Indian oil petrol bunks and other cases, there will be a lot of confusion whether you can opt for a scheme or you can't opt, or you may have a client where the exempted turnover, that is a fixed deposit interest or some rental income from the residential building is very huge, and they may not be declaring properly in the return. In those cases, you have to be very careful to select this scheme. We'll take some example to understand how aggregate turnover has to be looked in for the purpose of selecting QRMP scheme. Okay, we'll take an example. Karnataka branch. You have 2 branches in this example. One, Karnataka, you have 400 lakhs turnover, and you have one more branch in Tamil Nadu, 50 lakh turnover. So aggregate turnover means all India basis, you need to combine both the branches turnover. If you combine both the branches turnover, 450 lakhs, which is less than 5 crores. Now question comes, can you opt for this scheme? Okay. As I already explained, if the aggregate turnover is less than 5 crores, there is no bar on you to opt this scheme. So both the states are eligible to take QRMP scheme. There is an option, and as I already told, this QRMP is a scheme which is given optional. If you want, you can opt it. If you don't want, you need not opt it. So you can still go ahead and file monthly returns. But if you opt for quarterly return, that is for your advantage. If you want, you can opt it. If you don't want, you need not opt. There is some difficulty in quarterly return that we'll cover later stage. But at this point of time, the QRMP scheme is an optional. If you want, you can opt. If you don't want, you need not opt. In this case, we'll take one more example in this. Karnataka, you have 400 lakhs turnover. Tamil Nadu, you have 50 lakhs turnover. Okay. Karnataka says this turnover is 400 lakhs, very huge. They can't do quarterly reconciliation. They want to file monthly. So Karnataka decides to go for monthly filing and rejects QRMP scheme. Karnataka branch don't want to take QRMP scheme, but Tamil Nadu branch want QRMP scheme. Can Tamil Nadu do if the Karnataka doesn't take? Yes, they can. So there is no bar on GST and wise. Once the total aggregate turnover of Pan India is less than 5 crore, then each branch means each GSTN has its own independence. Each GSTN can opt the scheme or reject the scheme. They want, they can opt. If they don't want, no. And also permutations and combinations possible. Karnataka can opt, Tamil Nadu may not opt, or Tamil Nadu can opt, Karnataka may not opt. So all these things possible, but the only thing what we need to check, Pan India basis less than 5 crores, then each branch has its own independence to either to select the scheme or not to select the scheme. Hope this is clear. We'll go to next example. Karnataka 500 lakhs turnover, that is 5 crores. Assam to only 2 lakh rupees. So if you take in this example, the aggregate turnover, because all India turnover 5 crore 2 lakhs is the aggregate turnover. So once we see the aggregate turnover on all India basis, both are not eligible. The both state cannot opt for QRMP scheme. You may say that, sir, Assam is only 2 lakh turnover. Why we should not get this benefit? But the act says it is aggregate turnover. Once aggregate turnover, there is no option for you to go for QRMP scheme. Take next example. The worst, Kerala just started only 1 rupee turnover. Even though it is only 1 rupee turnover, you are not eligible to take QRMP scheme because aggregate turnover is Pan India level. You need to see aggregate turnover. Next, a little tricky question. In Karnataka, there is 210 lakh turnover, plus there is a 250 worth of goods sent to Tamil Nadu branch. And Tamil Nadu branch, there is a sale of 50 lakh rupees. Okay. How much is the aggregate turnover is the question. Because if you know how much is the aggregate turnover, you will get an answer whether you can opt for the scheme or you can't. How much is the aggregate turnover? You can just check on your own and you can calculate and you can post chat whether you can. Okay. You can give the answer through chat, and somebody says, please adjust screen looking blur. 1 second. Okay. Is that PPT is blurred or my face is blurred? If my face is blurred, I think it's okay. Okay. I think the screen is fine. If anything is there, you get back to me. Otherwise, we'll continue. Okay. So you can send your answer through chat. Here, how much is the aggregate turnover is the question. So Karnataka, 210 lakhs plus 250 goods worth of goods sent from Karnataka branch to Tamil Nadu branch, and Tamil Nadu branch has independent supply of 50 lakhs to outsiders. Okay. And Karnataka and Tamil Nadu both have different registration. Clear? So how much is the total aggregate turnover? So as you know, both are different registered person. So both are registered having two different GST number. So that aggregate turnover, you need to add 210, 250 plus 50, 300, 500 and 5 crore 10 lakhs. So because the aggregate turnover is 5 crores 10 lakhs, which is more than 5 crore, you cannot opt for QRMP scheme. Now, if you take Karnataka exclusively exempted goods, 550 lakhs registration not taken because of section 23 is gives an option. If you are fully exempted turnover, you need not opt for registration. So Karnataka has a fully exempted turnover of 550 lakhs and registration is not taken. And Tamil Nadu taxable goods is 5 lakhs, just 5 lakhs. And system will not be knowing any supply of Karnataka which is exempted. Why system will not be knowing? Because Tamil Nadu only registered and Tamil Nadu is filing the registration. Tamil Nadu is filing the GST registration. Don't just go with what system classifies. System will not be knowing what is your actual aggregate turnover, and some exempted, some state you are not taken registration because you are fully exempted. So all this fact will not be available with the system. So GSTN will classify you based on only turnover of Tamil Nadu branch. So, but you will be knowing what is the exempted service, what is the other branch turnover, all these facts only SC will have. Because of this, you need to check thoroughly. In this case, even though system classify you as eligible for QRMP, but actually you are not eligible because you need to add exempted turnover of Karnataka branch, which is 5 crore 50 lakhs. So total aggregate turnover is 555. Okay. Next example, if you take Karnataka total sales 290 lakhs plus 150 lakhs transferred to Mysore branch from Bangalore branch having one GST registration, and Mysore branch there is a sale to outsiders 90 lakhs. So here one important aspect you should know is transfer within the registered entities. For example, Bangalore and GST is having same GSTN, then any transfer between Bangalore and Mysore is not liable for tax because it's not a subplay and will not be added to your aggregate turnover. So this 150,000 transfer from Mysore to Bangalore branch should not be considered for the purpose of calculating aggregate turnover. So if you exclude this 1 crore or 150 lakhs, what will be your aggregate turnover? 380. So 380 is less than 5 crores. You are eligible to take QRMP scheme. Okay, so we discussed in the previous slide based on the branches. Now we see nature 1, nature 2. Take an example, rent from residential building 250 lakhs, sale of garment 260 lakhs. Not eligible because even though rent from residential building is exempt, you need to include for aggregate turnover calculation. Next is very important and majority of them will miss to consider is in respect of petrol bunks. The sale of petrol and diesel is 490 lakhs, but sale of engine oil is only 20 lakhs. If you see the aggregate turnover definition, the aggregate turnover definition includes exempt supply. If you see the definition of exempt supply includes even non-GST supply. Petrol being a non-GST supply should be added for the purpose of aggregate. And if you see it is more than 5 crores and you are not eligible for QRMP scheme. Salary received for 480 and stationery 30 lakhs because salary is scheduled 3 item which is not a supply at all. So you need not include. The sale of stationery is only 30 and you are eligible to take this scheme. Then sale of land, same answer, sale of land is covered in schedule 3. Construction service is taxable 30 lakhs because sale of land is not a supply at all. It is neither supply of goods nor a supply of service. Hence, this portion of sale of land should be excluded for the purpose of computing aggregate turnover. And because its aggregate turnover is only 30 lakhs, you will be eligible to opt for the scheme. Okay. Next, sale 480 lakhs, GST collected 30 lakhs. Next question comes, what is aggregate turnover? Whether you need to include taxes or exclude taxes. You may be in the border case like this where your taxable turnover in the P&L is 480, but if you add GST collected, it is crossing 5 crores. Then you may have a confusion whether you can opt for the scheme or you cannot. So aggregate turnover definition is very clear. You need to add all other taxes excluding CGST, SGST and cess and IGST. So in GST taxes, you should exclude from turnover to determine what is your aggregate turnover. So in this case, you have to exclude GST collected, that is 30 lakhs. If you exclude 30 lakhs, your sale is only, taxable value is only 480 lakhs, which is less than 5 crores. Hence, you are eligible to opt for QRMP scheme. Next, we will take a little bit similar example where your sale is 480 with GST and inward RCM 30 lakhs. Okay. The important question what you need to answer, whether inward RCM which is liable to be taxed in your end, whether you include it in aggregate turnover. So aggregate turnover includes only forward supply and does not include reverse charge, even though you are paying taxes on reverse charge basis, but you should not include taxes paid on RCM basis in aggregate turnover definition. Once you exclude this inward supply from RCM, it is only 480 lakhs and you are eligible to take QRMP scheme. So just now we have discussed what is QRMP scheme, what are the eligibility criteria, and this aggregate turnover, how you need to look into in a various situations so that you will be in a better position to understand turnovers and their implication and the methodology to compute aggregate turnover. Once you are able to compute the aggregate turnover, then other 2-3 aspects you can consider and then decide whether you can go for the scheme or not. Then what is the problem in the scheme? What are the benefits in the scheme? We will see in the subsequent slides. Okay. Fine. So as the name says, quarterly return, monthly payment. QRMP, quarterly return, monthly payment. Then when the department says you file quarterly, but taxes you have to pay monthly. The first question which everyone thought is, if I am paying monthly, then again I need to compute, right? Again I need to compute every month what is the taxes, what is my outward supply, what is my inward supply. I need to see what is my outward, what is my inward, what is the net tax I need to pay. Then anyway I am doing all the computation. What is the big deal in quarterly return? Better I feel file monthly. Then department said, no, okay. If calculating tax itself is a burden, okay. Don't calculate monthly what is the tax liability, you ignore it. You pay one fixed sum. Okay, you pay one fixed sum to the department on first 2 months. See, quarterly means 3 months. In the first month and second month, they give some fixed sum. Okay, you pay that fixed sum. That is the full compliance of payment of tax. You need not pay any interest. If you pay that fixed sum, that is compliance of your payment of monthly taxes. Okay. How to compute this fixed sum? Because department says you pay fixed sum, you need not calculate actual. Okay. For paying monthly taxes, department has provided 2 options. Okay. Department has provided 2 options. First option, fixed sum method. At a fixed sum, you can make a payment. How to calculate fixed sum? We will come next. Next, self-assessment method. Okay. So next question comes, if you say fixed sum, again the assessee will ask, this month I don't have any turnover because of some family problem. I closed the entire business. I don't have any business at all. You are asking me to pay some fixed sum, which is not fair. Again, department said, okay, you take. Whichever option you want, you take. You want, somebody says difficult to calculate self-assessment, then you pay 35%. Somebody says I don't have any turnover, why you asking me to pay 35%? Then you do self-assessment. In the first 2 months, 3 months there is no issue, because in the 3rd month anyway you are filing 3B and you will be considering all the turnover and all the input tax credit for the entire quarter, and what are the taxes paid in the first 2 months you will be taking care in the 3rd quarter. So 3rd quarter it will not be an issue, because you will be paying, if at all you are required to pay, you will pay actual. The problem comes in the first 2 months. First 2 months, department has given 2 options, as I already told, fixed sum method or self-assessment method. Now if we come to fixed sum method, what is fixed sum method? What is fixed sum method? Pay 35% of taxes paid in cash in the previous quarter, where the return is furnished quarterly. Okay. If the previous return is filed monthly, then pay 100% of taxes paid in cash, not in credit. So what we are talking is payment of tax is only cash, not credit. The credit payment, adjusting credit against output, all this will take care only in quarter 3. First quarter and second quarter is only payment of tax in cash. How to determine this? You see what is the last quarter. So you are opted for QRMP scheme first time. Then obviously last month would have been monthly filing. Last would have been 3B for a month. If you have filed a 3B for a month, then see how much is the amount you paid in cash. If you have paid in cash 100 rupees, next 2 months also you pay 100. There is no issue. Last month you have paid 0. Then you need not pay any taxes for the first and second month. For example, you already opted for QRMP scheme in Jan to March. Now you are paying taxes for April and May. So April and May you need to pay taxes. Then how you will identify what is the total taxes paid in January to March? For this quarter, when you have filed the 3B, here it says the return furnished. So return is not your PM06 cash payment, return is 3B. So in the month of April to March, the previous return is January to March. January to March you have filed 3B and you have paid some amount in cash. You identify how much is the amount in cash. Then after identifying how much amount you have paid in cash, then you need to see whether the previous return which is filed is for a month or for a quarter. If the previous return which is filed, previous return is the previous 3B what you have filed. If the previous 3B what you have filed is for a quarter, then you pay 35% of cash paid in that quarter, not the entire output tax liability. you have to see only tax cash portion. If, for example, in the last quarter of 3B, you had 1 lakh liability. Out of this 1 lakh, 99,000 is paid through credit. Only 10,000 is paid through cash. Then you need to see only 10,000. If the Jan to March quarter you are paid 10,000, then 35% of 10,000, 3,500 rupees has to be paid in the first month of April, because previous was quarterly. For example, you are opted just now. You are opted Jan to March. Jan to March you are opted. You don't know now. Your first month payment comes in. Now within 25th you need to pay first month. January month you are opted for QRMP scheme. In January month, all of you will have a first question: how much cash payment I should suggest? What do you need to see? You need to see the previous 3B. Previous 3B, normally because you are opted for Jan, previous 3B will be December. December month 3B you take, because last year there was no QRMP scheme. Because of that, all 3Bs would have been monthly. So you take the December month. How much cash you have paid in December month 3B? If the cash portion you identify, on that 100% you need to pay in January. So simple option: January PMT 06 cash payment which is required is equal to cash payment of December GSTR 3B. Clear? So these are the two method. One, fixed sum self-assessment. In the fixed sum, either 35 or 100% based on your previous return. If the previous return quarterly, then pay 35%. The previous return is monthly, then you pay 100% of cash paid in those in the previous return. That is previous 3B. That is fixed sum method. Next, come to self-assessment method. If you based on your self-assessment, your tax liability is coming different. It may be less or it may be more. If it is more, obviously you will be prudent. You will not go for self-assessment method. You will just go to fixed sum method and you pay 30% and close it. 35% or 100% as the case may be, you close it. If you are going for a self-assessment, then you need to identify what is my outward supply, what is my RCM liability minus eligible ITC. How much is my eligible ITC? So eligible ITC, you mean ask all the conditions, 16(2) conditions, 36(4) condition. You need to comply with all the conditions and then identify how much ITC you are eligible. Then you calculate how much cash has to be paid. Only cash portion. No other compliance is required in the month of January. In the month of February, there is no other compliance which is required. What is required is only what is only required is payment, cash payment, that is PMT 06 self-assessment based. What is required? You need to make the payment. No 3B, no GSTR-1, no other filing which is required in first 2 months. First 2 months only payment. Third month as usual 3B plus GSTR-1 plus taxes. Okay. Okay. Yeah. We'll take fixed sum method. Some examples to see how taxes has to be paid. And one of the advantages in fixed sum method, you need not calculate. It will generate a pre-filled Challan for payment for ease of reference. I'm just explaining all this to, if there is any variation, if anything, you should know the law. So once you know the law, whether pre-filled Challan which system is calculating is correct or not, you will be able to appreciate. First, taxes has to be paid every month with the PMT 06 Challan, which is the normal Challan. Now, in the normal Challan, they have given one more additional option that I will explain you in the subsequent slides. Okay. In this method, 35% or 100%, which I already told as the case may be. First, we'll take example taxes paid in cash in the quarter Jan to March 21. In Jan to March 21, you are paid CGST 100, SGST 100, IGST 500, cess 50. So this 100, 550 is not total payment, not cash plus credit, it's only cash payment. How much tax you paid in cash is only you need to consider. Because the previous Jan to March is a quarter, then how much tax you have to pay in April and May. Whatever you have to pay in April is equal to May, because in both the first 2 months of the quarter, you need to pay only a fixed sum. What is that? 35% of previous quarter's cash payment. Previous quarter's cash payment is 100. So previous quarter's cash payment, it doesn't mean that you need to calculate only tax paid in March month. No. In the return, whatever the tax you paid in Jan, Feb also is cumulatively included in computation. So entire Jan to March, you need to see how much tax you paid in cash in the 3B. Okay. In the between, meanwhile, you would have paid PMT 06 in Jan and Feb also. But aggregate, you need to see how much total you paid in cash in the quarter Jan to March. In our example, it says 100 rupees you paid in cash. Then April and May is the same amount, you need to pay 35. SGST, because it's 100 into 35% is 35 rupees. 135% is the IGST 175 and cess 17.5. This has to be paid in April and May as a fixed sum, so that you will not have any interest liability. Okay. We'll take an example where the previous return is monthly. Okay. Take an example 2021. You had opted for monthly. You are not opted for QRMP scheme, and your each month you have filed 3B GSTR-1 in the Jan, Feb, March. Each month individually you have filed the returns, because you opted for QRMP scheme from April onwards, April 2021. In the April 2021 you opted for QRMP scheme. In April and May you need to pay fixed sum. June, anyhow it is the quarterly. You have to file GSTR 3B. You can do actual computation in June month. But in April and May it is a fixed sum. In the April, how much you need to pay is based on March return. There is a previous return. Previous return is monthly, that is March, and you have paid in cash 50 rupees, 50 rupees, 80 rupees IGST, such 10 rupees. So same has to be paid. That is 100% of previous month's cash payment has to be paid in the month of April. 50, 50, 80, 10. Also in May, same 50, 50, 80, 10 has to be paid in May month. June month, how much you need to pay? We don't know, because there is no fixed sum for the month of June. June, you need to consider actual upward, actual eligible input tax credit and RCM liability, and you need to deduct cash already paid in April and May, and then balance, if any, has to be paid in the month of June while filing 3B. Okay. Okay. So what if the previous month we have not paid any taxes? Then you need not pay any cash in April and May. So previous month or previous quarter you have not paid any cash. Then 35% or 100% of zero is nothing but a zero. Then you need not pay any tax in the first 2 months, but in the third month you have to pay. And the next question it comes, I already my cash ledger and credit ledger is sufficient to take care of my 2-3 months liability, 2-3 quarters liability, because you have huge import, there is no proper sales, or you have a huge machinery which is installed, or you have commenced the business in the month of January or April, and you have incurred a huge expenditure for purchasing stock and other things, and you have a huge input tax credit which is in crores, and you know that within 1 year or 2 years this credit is not going to utilize. In those cases you need not make any payment. If that is, you can opt for self-assessment, and you can see that sufficient credit is available. Sufficient credit ledger balance. If you have a sufficient cash ledger balance, you need not make PMT 06 payment in the first 2 months, and last month anyhow, if you are if there is no liability in the last month, you need not make any payment at the time of filing GSTR 3B. Next question comes, when you need to deposit this fixed sum or self-assessed cash payment. You have to do in PMD06, that is an Ahmad Challan, before 25th. So your 3B due date is 22 and 24, staggered. In some state it is 24, for Canada 22, and some other states it's 24. But for a paying PMD06, the due date is 25th. By 25th, you need to generate a Challan and make cash payment if at all you are liable to make the payment. Okay. Caution should be taken while generating a Challan. Taxpayer should select monthly payment for quarterly pages for the reason for generating a Challan. So if you see this Challan screen, once you go to the screen, payment reason for Challan generation, you'll get two reasons. One, monthly payment for quarterly returners, and another, any other payment. So earlier, once you generate a Challan, it directly used to take to minor rates and major rates. Now, in between, there is an option. You have to select monthly payment for quarterly returners and any other payment. You may ask why this is required. So this is required for identifying interest liability. Okay, if you say any other payment, then system will not consider this for monthly payment of quarterly return filers. So you need to select the monthly payment for quarterly return, then only system will not send you a notice for short payment of interest. I'll tell you what happens. In a quarter, you have a 300 rupees liability. You opted for self-assessment scheme, you assume you have a 300 rupees liability in a quarter. So you should have, you assume for a simple calculation, each month 100 rupees cash should have been paid. So in the self-assessment method, first month you should have paid 100, second month you should have paid 100, third month another 100, file 3B. But by mistake you have selected any other payment instead of monthly payment for quarterly return. Then system will calculate interest for first 2 months, because system will default, it will take only how much you have paid for each month. If you have selected any other payment, then there is a possibility that you may get a notice for the payment of interest. Next question comes, whether we should pay the interest. According to me, no, because circular is also very clear. If you have a sufficient cash balance or credit balance in your ledger, you need not make a payment. Even though if you make a wrong payment, according to me, there should not be any interest liability, but it will go for a litigation and you may get system generated notice for the interest payment. Again, you need to go on, you need to show the ledger, explain all these things. So better is prevention. Always select monthly payment for quarterly returners and then you make the payment. Anyway, you are making the payment. Whenever you make the payment, it is better to select proper heading and proper payment, so that system also says there is no short payment and there will not be any system notices which you need to respond manually, and you need to spend a lot of time in answering questions. So if you select a proper heading, so it will be better. Once you select monthly payment for quarterly returns, then it will ask which financial year and which period. You need to select a financial year and period. After selecting that, then it says Challan type. Okay, Challan type, is it 35% Challan or Challan on self-assessment basis? If you say 35% Challan, then system automatically fills the amount which you are liable to pay. Either it may be 35% because of last quarter payment or 100% because of last monthly filing. Is based on that, system will automatically figures out how much you are liable to pay. And if you once you select 35% Challan, you need not bother much, but it is always advisable to see if it's a very huge variation. Then you can directly generate a Challan and make the payment. But if you select Challan on self-assessment basis, then you will have to do a computation and determine how much you are liable, and then you make a payment. These all are regarding payment. So we identified what is QRMP scheme, then we identify what is QRMP, how it has to be done. Next requirement is in respect of interest liability. Okay, now we'll see how the system will calculate interest liability, in which cases you are liable to pay interest and which cases you are not liable to pay interest, and from which date to which date you are liable to pay interest. And in some cases, you need not deposit any taxes. One of those cases, you are nil tax liability. Your tax liability is nil in the particular month, then you need not deposit any taxes. You can say self-assess, if any liability there, you can say self-assess and pay less amount. If you say it is no tax liability, then you need not generate any challan. See, challan generation, last time somebody asked me a question, whether this challan has to be generated even for nil. No. Is the payment challan has to be generated only if there is a liability. If there is no liability, you need not pay any tax, you need not generate any challan. Okay. Next, first, in the first month, you need not deposit if the balance in electronic cash ledger and electronic credit ledger is sufficient to take care of your first month's liability. Then you need not deposit any tax in PMT06 in the first month. While calculating second month, you need to consider how much is the balance in electronic cash ledger, how much is the balance in electronic credit ledger. Also, you need to consider the tax liability cumulatively. You have to consider what is the tax liability of first month, second month. And if you still feel that there is no requirement of any payment of tax, you need not make any payment. You need not deposit, or you need not generate any challan. You just point that is sufficient. And I got a question the last time asking whether if you are not generating PMT06, is there any late fees? There is no late filing because it's not a return. It is the PMT06 is a challan for payment of tax and it is not a return. If you are not generated, even though you are liable, also you are not generated, there is no late filing fees. It will only attract interest. Okay. One of the biggest advantage I can see in QRMP scheme is MSMEs will, majority of them will file belatedly. In those cases, earlier your liability was used to file monthly returns. 12 months you supposed to file 3B, and if you calculate late filing fees for 12 returns, it would have been a huge. Now this 12 returns has been reduced to 4. Now late fees is also applicable only for 4 returns. Interest anyhow, whether you pay monthly or quarterly interest, anyhow it will come if you are not filing the scheme. This we already covered. Okay, let me take you through once again when you can opt and when you can opt out. So opt in, opt out is the same time. If you already opt in, you can opt out. If you are opt out, you can opt in. Okay, for a month of April to June, that is Q1. For a Q1, when you can opt in, you can opt in after 1st February. But within 30th April. So first month of the quarter is April. Within first month, you need to opt in. Otherwise, you can't opt in later for this quarter. For the next quarter, you can again change it. But for the first quarter, you can't change till you make manual selection. Take example, April to June quarter, Q1, you have to opt in within 30th April, and this option to opt in will start 1st February. If you by mistake, if you are defaulted to monthly filing, system would have defaulted you monthly filing for the quarter Jan to March. If it is already defaulted for Jan to March, what you need to do is you can right now log into portal and select to quarterly. That quarterly will give effect only for April to June quarter. Once you opted, that will continue. Then again there is a question whether this opt on opt out has to be done month on month, quarterly. No, whenever you want to change, you have to change once. Once it is changed, it will be fixed. If you opt in for quarter, every quarter you need to file the return and every month you need to make the payment. System will not change you unless your turnover crosses 5 crores. Then opt out, it is your wish. If you want to opt out anytime, you can opt out. Once you opt out, that effect will be for next quarter. Next question comes for April to June first quarter. I opted, say I am trying to opt in to a QRMP scheme on 1st February. 1st February, you need to ensure that there is no 3B unfiled. After passing the due date, if there is a default in filing 3B, then this option will be blocked. You can't file. So on 1st February, January, there is a due date still it is there, then you can opt in. For December, the due date 20th January is already over. 20th January or 22 as the case, maybe it's already over. If you are not filed December return, then you can't change the scheme. You will be continue with monthly scheme. So first you clear all your defaults, file all your 3Bs, then you can come for this opt-in scheme and you can opt in. So opt-in, it's a standard 2 months before, for example, July. For a July to September Q2, option to opt-in starts from 1st May itself, and you will have till 31st July. Within that period, you need to opt in. So if you're not opt-in, then what is your default for the previous quarter will continue, or if you want to opt out in the same period, you can opt out and change your scheme. Okay. Yeah, this is the thing which I wanted to explain, which already somebody asked me a question, so I told. Once your option is available, will continue until you opt out or until your turnover crossed 5 crores. Once the turnover process, next quarter you will not be having this option. You have to compulsory opt out. Shifting from monthly to quarterly, you can make as per the schedule which I shown in the previous slide. You can select and it will give effect from the next quarter. Next comes how to opt in or opt out. So taxpayer can opt in, that is avail the scheme, or opt out, exit from the scheme by navigating to login services. Under the service there is a return. Under return there is an opt-in for quarterly return. So even for opt-out you have to go there and you have to select opt-out or monthly or quarterly. There's the two radio buttons. You need to select either monthly or quarterly and save. Once it is saved, it will not ask any digital signature, or it will not even ask for OTP. Once you change the scheme, it will give effect in the subsequent quarter. Next. So this is also covered, but I'll just reiterate for the person who joined later. Multiple GSTN on same PAN. Okay, one PAN you have of 6-7 branches. You have a different state. You have option either to some GSTN can go for quarterly or some GSTN can go monthly. There is no bar. If one select monthly, others has to select monthly. There is no such restriction which is there in composition scheme. If you opt for one GST, opt for composition, everyone has to opt composition. If one exit, everyone has to exit. All this condition and restriction is there under composition scheme, but for QRMP scheme, there is no such restriction. One GSTN can go for monthly and another GSTN can go for quarterly. Very well within the law, but only thing is overall GSTN level you should ensure that overall it is less than 5 crores. If it is less than 5 crores, each GSTN have option to do that. If the GSTN PAN level it is more than 5 crores, then there is no other option. All GSTN should follow monthly. Okay. So in the new registration, immediately you can decide either you want to go monthly or quarterly. Okay. So again. In respect of 3B and GSTR-1, which is already told, in respect of 3B due date, there is no change in GSTR 3B due date. If you are in the Karnataka and some other notified states, it is 22. If the northeastern states, then it is 24th of the succeeding quarter. Once the quarter ends, within 22nd or 24th, you need to file your GSTR 3B. Okay. In GST 3B, you already know that you need to declare all your outward supplies, RCNs and ITC which is eligible. You need to avail it and you need to compute how much you need to pay in cash. And in that, you need to reduce which is already paid. There is month 1, month 2, whatever M1, M2 tax you paid. You can reduce that and you have to make only a balance tax payment in GSTR 3B for offsetting your liability. Next, as I already told, even GSTR-1 is also quarterly and GSTR-1 is not monthly. So what is the due date for filing GSTR-1 is 13th of subsequent quarter. So within 13th you need to file GSTR after the within the quarter. What is the compliance? If you opted for a QRMP scheme, within the quarter there is no compliance except paying cash. Okay, first month 1, month 2, you need to identify what is your cash liability based on fixed sum or self-assessment basis. You need to identify how much you need to pay in cash and you pay it. There's the only 2 requirement within the month. Okay, within the quarter. Once the quarter is completed, okay, once quarter is completed, within 30 days you need to file GSTR-1 and within 22 or 24 as the case may be, you need to file GSTR-3B. Once quarter ends, you need to file the return, that is GSTR-1, 3B. Within the quarter, there is the requirement is only payment of tax. Next, in the first month by mistake you paid more, can you claim the refund? No. First month, 2 months is only self-assessment as the fixed sum basis. Whatever you paid is locked. You cannot claim the refund till you file 3B. After filing the 3B, and if you liability as per 3B is less than that, and if you have surplus cash, then you can file for a refund of cash ledger balance. Till that time, you cannot claim for a refund. Once the return filed, then only you can go for a claim. Or if the excess amount, you can adjust it for next month. In the next month, you can reduce that excess payment of the previous month, and you can make the payment. What is required is you have to ensure the sufficient cash balance in electronic cash ledger. If there is a shortfall in electronic cash ledger, then you will end up paying interest. Okay. So next, see, whenever you make a deposit, that amount cannot be utilized for any other purpose till the return is filed. So one of the discussion point when the scheme is implemented is one, they'll make a challan and they will add the cash ledger to cash ledger. But they can use this cash ledger for any other purpose. For example, you are filing annual return, your GSTR-9, or some check post case where there is a demand raised as show cause notice issues. There are so many reasons where you require to make the payment. So if it is sitting in a cash ledger, you can generate a DRC03 and you use the payment which is meant for 3B. So the department felt that there is a it may create a problem because the cash ledger is like a bank balance. You can use it for any type of cash payment, any type of tax payment. So department thought they will do a 2 category of challan generation. One, tax payment for monthly payment for a quarterly filers, and other. If you are filing a monthly payment for a quarterly filers, that amount you can use only for 3B filing, and that amount you cannot touch for any other purpose. Maybe it is check post, you got a show cause notice, or for GSTR-9 filing, 9C filing, you can't generate DRC03 with cash balance which is paid for meant for monthly payment for a quarterly filers. If you select that option, that cash balance is not eligible, not available for all these challans. So this amount is eligible only for paying 3B liability. Okay, this deposit cannot be used for any other purpose except for filing quarterly return. Okay. Next question comes. Okay, next question comes. Sir, if I opt for quarterly scheme, my suppliers, when do they get ITC? Okay. If I opt for quarterly, when my customers will get ITC? Because customers buying a goods from me, I am giving a valid tax invoice. When my customer will get ITC? So you already know 36(4) and other restrictions. You can avail input tax credit only if it is appearing in your 2B. If the 2B is not appearing, you will not be able to take this benefit. So the big companies, MNCs, and they will defer or they will not prefer buying from MSMEs or QRMP persons who opted for QRMP scheme. Why? The main reason will be they will not get a credit till the person who has opted for QRMP scheme files GSTR-1. If the person who has opted for QRMP scheme files GSTR-1 only after completing the quarter. Once the quarter is completed, then he will file GSTR-1. Once he is filed GSTR-1, then it will pass us through to his 2A and 2B. Once it is appearing in 2A and 2B, then only the customer will be eligible to claim this input tax credit. Then client says, no sir, if my supply is not eligible to take credit, the customers may not come forward to buy goods from me, then there will be a business loss. Okay, if there is a business loss, then there is no meaning in opting QRMP. If the QRMP, because of QRMP, you are losing some revenue, obviously no one will go for this scheme. Then government said, okay, don't worry, we'll give one more facility, that is invoice furnishing facility. Okay, this is the invoice furnishing facility where if some customers is very particular that they want credit, then what is the additional option which is GST is giving is invoice furnishing facility. You can go to return dashboard monthly, you can select the particular month, and you can go to invoicing furnishing facility tab, and you can upload these invoices and submit. Okay, once you go to this and submit, this will transit to GSTR-2B and they can take a credit. Okay, so if I want to refresh my previous discussion, in the previous discussion I told within the quarter, okay, the only compliance required is paying taxes. After the quarter, your GSTR-1, GSTR-3B has to be filed. Okay, but if your customers are very much insisting to file IFF, then additional work which is involved in the month M1, M2 is IFF. You need to file invoices, and IFF is only for B2B invoices. IFF is not for B2C, it is only to B2B invoices. First month and second month, you can furnish all your B2B invoices. The invoices which are furnished to IFF will travel to 2B and the customers are eligible to take credit. Okay. If your customers are insisting, then there is an additional compliance requirement in the Q1, Q2 to furnish IFF. Okay. Next question. If I furnish IFF, am I liable, even liable to file GSTR-1? Yes. The IFF is only a time gap arrangement, and there is no late fees for IFF. It is an optional. If you want, you can file it. If any of the customers are insisting they want to take a credit, then it is an optional for you. There is no penalty, there is no interest, no late filing fees if you are not furnishing IFF. IFF is an option. If you want, you can. If you do it, your customers will get benefit. If you are not doing, no problem. GSTR-1, file it. They will get, after the quarter, they will get a credit. Next. If I furnish these invoices in IFF, same invoices should not be furnished in GSTR-1. Okay. So duplication should not be this. Whatever IFF you have furnished will add back to invoices in GSTR-1. Again, you need not furnish. For example, you have done 10 invoices, 10 sales in a quarter. Out of these 10 sales, 2 sales in the first month you filed IFF. Second month, 4 invoices you filed IFF. Then 4 plus 2, 6 you already furnished in IFF. Then remaining 4 has to be added in GSTR-1. And these invoices which you already filled in IFSs will get added in GSTR-1. And finally, you need to submit. While submitting GSTR-1, most care has to be taken. Okay, because of the recent GST amendment and the link between GSTR-1 and 3B. So in the if you, for example, you take an example in IFF, if it is the same invoice number, it will show an error. By mistake, in the typo error, if you have done the mistake even in the invoice number, for example, in the I told you 10 invoices as an example. In the first month you have filed 5, second month you have filed 4. By mistake in the GSTR-1, again, if you upload all these 9 invoices, the liability in GSTR-1 will get doubled. Because GSTR-1 it is double, it will directly move to 3B. In 3B, they are saying from 1st April, they are not allowed to modify 3B. Right now, you can modify it, only show an error in the red stating that you are modifying more than 10% or 5% now, as the case may be. But from April, it is very difficult. And next problem will come. If your GSTR-1 is more and 3B is less, GSTR-1 is more and 3B is less. With the recent budget amendment, they can directly go for recovery. So they are deeming that whatever liability you are declared in GSTR-1 is self-admitted liability, has to be discharged. Okay, GSTR-1, if you have done mistake, it has to be discharged. Otherwise, they can go for a direct recovery. Directly, they will go to bank and they will attach your bank account to the extent of difference. Then again, you have to amend GSTR-1 in the next quarter, and again, there's a very huge gap between GSTR-1 and other things. Since the department has started, and again you have to go to department, you have to explain all these things. There is a mistake. There's a lot of waste of manpower if you do this mistake. So you have to be very careful. So what I am suggesting, wherever it is not required, don't file IFF. Unless the customer is very stringent and you want the credit at any cost, then only you file IFF. Then it is better, don't do 50% IFF and 50% GSTR. You have a fixed procedure for your client. For example, if one client's customers are least bother, don't file IFF, quarterly file GSTR-1, they will take the credit quarterly. If some clients want, then you file all. 10 invoices or 100 invoices, whatever is there, file all IFF, so that in quarterly you need not file any GSTR-1 related to B2B, so that there will not be a double and confusion. If you are file all the invoices for Q1, month 1, month 2, and month 3 in GSTR-1, so that confusion can be avoided. For example, only for 4 clients you file IFF, and again while filing GSTR-1 you should have a track of what you filed in IFF, what is not filed in IFF, has to be do a reconciliation. So better avoid IFF. If you are not able to avoid, file entire invoices, don't do piecemeal, and then it becomes a confusion at the time of filing GSTR-1. Now we have a lot of reconciliation. 2A, 2B, 2B versus books of purchase registration versus 2B, and 3B versus GSTR-1. Now one more reconciliation will add up, that is IFF versus GSTR-1. IFF, GSTR-1 combined together with 3B. So we are already chartered accounts lives are getting messed with all these reconciliations. So don't create a situation where you will do one more reconciliation of IFF with 3B, IFF with GSTR-1. Don't do all these things. Either follow totally or ignore 100%. So any one will be better. So for opting out, I already okay. So if you opted for QRMP scheme and GSTR QRMP scheme and GSTR and quarterly, then the customer will get credit only after you file GSTR-1. Okay, if your GSTR-1 due date is 13, if you have filed before that, then after the end of the quarter, the customer will get credit. For example, Jan to March. In the March, GSTR-1 has to be filed in 3B. So the customer will get a credit in the month of March. Okay, they can take a credit in March and they can utilize. So opting in, opting out, same procedure. In the previous slides, I have explained. You can navigate login services return, opt-in for quarterly return. Once you go for opt-in for quarterly return, they have monthly and quarterly. If you are in monthly, you can change the rate of return to quarterly. If you have quarterly, then you can change it to monthly. The procedure is same, because I saw some questions. I'm just asking this, just answering those questions. Next. So I already told invoice furnishing facility, either you go full or don't go. Next, B2B invoices, there is a cap. Okay, IFF per month, the value of B2B invoices cannot cross more than 50 lakhs. 50 lakhs they arrived based on your yearly aggregate turnovers less than 5 crores. Based on that concept, they said in monthly you cannot cross more than 50 lakh. If you are seasonal business and out of this 3 crores of total business of you do it only in 3 months, then you will be in big trouble, because IFF allow maximum of 50 lakhs per month. So what you can do, you do 50 lakhs for 2 months, and balance you have to compulsorily file in GSTR-1 itself, and you can't file IFF for more than 50 lakhs. Okay, value of invoices up to 50 lakhs can be filed in IFF, not more than that. This 50 lakhs is not the tax amount, is the taxable turnover. Next question comes, if you are seasonal, then it will be very difficult for us to follow opt for this QRMP scheme. What you can do, if you are doing a seasonal business, then in those 3 months or 6 months, whenever you do the business, you opt for monthly. Once you finish this season, you opt for quarterly. So that is option is very well available. Once you opt for monthly, you can file monthly GSTR-1, because in GSTR-1 there is no upper limit of 50 lakhs. This upper limit of 50 lakhs is only in IFF. Okay. And when can I start filing IFF? The IFF can be filed continuously from the beginning of the month. For example, now we are in February. February sales, day to day you can start updating. So today I did 10 invoice, you can update in IFF. Tomorrow 10, like this, every day you can keep updating till 30th of next month. After that 30th, you need to submit. If you are not submitted, other person will not get a credit in 3B. You need to submit your IFF before 13th. If you miss this 13th deadline, then no, you can't file at all. Then you have to file only for substituting month, that is M2. Month 2, you can file again IFF. Again, that 50 lakhs criteria will come. If your first month you missed the option of IFF, 50 lakhs, then again you will go to second month. Second month you will not get first month 50, second month 50. No, second month you will get only 50. So if you miss the 13th deadline, it is gone. Your customer will not get a credit, because after completing 13th, 2B is get generated. 2B, what is 2B? All other things we'll discuss in the subsequent slide. For a time being, the 2B is self-generated purchase register by GSTN for each taxable person. For each taxable person, GSTN itself will prepare a purchase register, that is 2B. There's a lot of difference between 2A and 2B that we'll discuss in the subsequent slide. For now time being, the 2B will get generated after 13th. If you miss the deadline, 13th midnight 12 o'clock, before 12 o'clock you should submit. If you are not submitted even 1 second delayed, you can't file and system will generate 2B. Okay. Okay. So last date I told is the 13th. Next. So invoices filed via IFF should not be filed in GSTR-1 again. That's what I already explained. All the invoice filed IFF will flow into GSTR-2A or 3B, as the case may already explained. Since it is an optional facility, no late fee on filing IFF. So it's an option. You want to file it. If you don't want, don't file it. But there is no concept of filing belatedly. See, IFF has to be filed within 13th. If you are not filed within 13th, 14th you can't file. That's all. There is no question of late filing. You can't file. That's all, because an optional advantage given. If you want, you use it. If you are not using, you can't use. That's all. So once you go to our return dashboard, in the return dashboard, you have to select IFF. Once you select an IFF, you will get a 4 table. What is this 4 table? So in GSTR-1, you have 4, 5, 6, 7, 8, 9, 10, all these tables. So basically 7 comes B2C, table 4 comes B2B, table 6 comes export, right? In IFF, you have only 4 tables. One, table number 4, that is B2B invoices. Because IFF is required only for B2B, you can't file B2C invoices in IFF. You can only file B2B invoices in IFF. Next, credit notes or debit notes. That is table 8. So if you have any debit notes or credit notes, you can file in IFF. If you have done a credit note, then customer's credit balance eligibility will reduce. If you have filed debit notes, customer eligibility to credit note, ITC credit will increase. What is this 2 other table? So table 4 and table 9, we know table 4 B2B invoices, table 9 is credit note. What is this 2 more extra table? That is amendment. Okay, if you have done any mistake in B2B invoices, you can do amendment in 9A. If you have done any mistakes in credit note, debit note, you can do amendment for those invoices in 9C. Okay, if you have done any mistake, Either it may be filed through GSTR-1 or previous IFF. You can make a modification in table 8 and table 9A, table 9A and table 9C. Okay, so these are the 4 tables which is there in IFF. One for B2B credit notes, amendment invoice, and amendment credit notes. Next. Okay. Next, we'll see what. Okay, these are the main points and entire scheme content for purpose of QRMP scheme. So quarterly filing, monthly payment. These are the various ingredients: IFF, quarterly payment, interest liabilities, all these things. Okay. So one more very important thing which you should know is regarding 2A and 2B. What is 2A? What is 2B? What is the difference? What reconciliation you have to do every month? Whether you should see 2A or every month you should see 2B. So there is a lot of confusions. People don't know whether they should see 2A and reconcile their books of accounts, or they should see 2B and they reconcile, or whether they should do 2A and 2B reconciliation. So there's a lot of confusion. So we'll see one best standard practice, which is better, which we can follow. One, okay. First difference, generation. Okay, 2A will get generated on near real-time basis. Once the other party files GSTR-1, your 2A get updated. But your 3B get generated only after 13th. In last month it was 11th midnight after 12 o'clock. But henceforth it will be 13th, because IFF and quarterly filers GSTR-1 due date is 13th. Only after 13th this 2B get generated. So 2B generates only once in a month. Once 2B generated, the 2B will not undergo any changes. Because of that, 2B is static. Once you download 2B data, you download after 10 years or 1 year, 4 months, 5 months, the 2B data in the portal will not change. But in 2A, not so. If you download now, after 5 minutes, you download again 2B, the data may be changed. Why? So some other party would have filed GSTR-1 or some other things, or they made some amendment to invoices. So your 2A will keep changing, but 2B is constant. Okay. Okay. So this interest liability, there is some question how to compute interest, and also these interest slides are come in the later. So we'll do one thing. We'll finish up this interest, then we'll go to 2A and 2B. This one slide has come in between, no issues. Now interest. When you are doing a fixed sum method, or when you are doing self-assessment method, what is my interest liability? Okay. First, no interest would be payable if the tax is discharged by the auto calculated, that is fixed sum method. So once you generate a fixed sum method, fixed sum Challan and pay, there is no interest liability. Take an example. In the previous quarter, your turnover is only 1,000 rupees. In the subsequent quarter, your turnover has increased to 1.5 lakhs. Previous quarter, take a new example, only 10,000 turnover. In the next subsequent quarter, it is 1.5 lakhs. 10,000 to 1.5, there's a lot of increase. But if you're opting for fixed sum method, based on that calculation of 35% or 100% of previous GST return, if you make the payment, there is no interest liability. Even though actual liability is more than fixed sum, there will not be any liability. Okay. If you are making a payment after due date, then you are liable for 18% rate of interest. Further, in case if you are delaying filing your 3B, you need to pay interest as per section 50 subsection 1, that is 18% for the delay. So from the date of due date till the date you actually make the payment. Okay. So it is very clear, but for students' benefit, we'll take one example which is there in this. This example is given in the circular also. A registered person who has opted for a scheme has paid a total amount of 100 rupees in cash as a tax liability the previous quarter. So here it is a previous quarter. Previous quarter he has paid 100 rupees as a tax liability. In the previous quarter he has paid 100 rupees as a tax liability. Now we will compute what is the fixed sum he has to pay. In the first 2 months, that is 25th February and 25th March. So 25th February is the liability for January. 25th March is the liability for February. You need to pay 35. I already explained the ratio. The previous month is the month quarterly. Then if you have paid 100, then next 2 months you need to pay 35%. So he pays 35% in the 25th, 35 rupees again in 25th March for discharging tax liability for first 2 months of the quarter. That is for January and February. Okay. In the return for the quarter, it is found that the liability based on the outward and inward supplies for the January was 40 and for the February it is 42. Okay. So based on actual, if you compute after the completion of quarter, they identified that the liability for Jan quarter was actually 40. But how much we have paid? Based on fixed sum method, we have paid 35. In the month of February, 42 is the liability, but actually we paid 35. Okay. But the circular says there is no liability to pay interest on short paid tax, that is rupees 5 and 7 respectively. Okay. You have paid 5 and 7 less, but you opted for fixed sum method. So because of that, there is no interest liability for this quarter. You need not pay any interest. Okay. We'll take one more example. A registered person who has opted for a scheme has paid a total 100 rupees in cash as a tax liability in the previous quarter. Okay, October to December. So previous quarter is October to December. He opted to pay tax under fixed sum method. So how much you need to pay? He need to pay 35 for Jan and Feb. He pays 35 each on 25th February for Jan, 25th March for February, for discharging the tax liability for the first 2 months of the quarter, that is Jan and Feb. In his return for the quarter, it is found that total liability for the quarter net of available credit was rupees 125. But he filed the returns on 30th April. The interest would be payable at the applicable rate on 55 rupees. That is what? So as per 3B, he need to pay 125. He already paid 70 rupees, 35. If he would have filed this 3B within the due date, that is 25th April, there would not have been any interest. But in our example, in this illustration, he filed his monthly return on 30th April. Because you filed on 30th April, there is a delay of 5 days. The interest to be payable at the applicable rate on 55 rupees. So how we got 55 is nothing but total liability for a quarter is 125 and the taxes paid in each month, that is 35, 70. So 125 minus 70, that is 55. You need to pay interest for 55 for the from the due date of 3B till 30th April. So due date of 3B, if you say it can be either 22 or 24. From that time, you need to till 30th April, you need to pay interest at the rate of 18%. Yeah? Okay. Next. Okay. Interest under self-assessed method. Now in the previous slides, we checked how to compute interest for fixed sum method. Now we are seeing for self-assessment method. Self-assessment method is very clear. You are assessing your own liability and you are making the payment. If there is any shortfall, then you need to pay interest. If it is not a shortfall, there is no interest liability. Okay. If at all there is interest, you need to pay that interest while filing your GSTR 3B. Okay. Interest need not be paid through PMT06. PMT06 nothing but a regular Challan. If you go to menu, there is a create Challan. Once you go to create Challan, you will get a 2 option. monthly payment for quarterly filers or other. If you select monthly payment for quarterly filers, then you can make the payment for PMT06. Once you make the payment, then accordingly interest calculation and other things will follow. But payment of interest, you need not pay interest in the month. In the second month, for example, first month you are not filed, you identified there is a interest liability. In the second month, you need not make the interest payment. Interest payment has to be made along with filing 3B, because you have to increase the liability and the payment has to be done through cash ledger. Okay. Okay. Take an example. If you filed 3B belatedly, then regular interest. Now, as per the provision of 50 subsection 1, which is added, which says you need to pay interest only on net amount. What is net amount? The liability which you are discharged through cash. Only on those portion you need to pay interest at the rate of 18%. Okay. Okay, how you need to pay interest? Interest has to pay through cash. You can't use credit for a payment of interest or penalty. Cash credit can be used only for paying self-assessed tax and not for interest, penalty or late fees. All these things has to be paid only through cash. Okay. I think this I already covered. Late fees is applicable for delay in payment of tax in first 2 months of the quarter. No, because first 2 months we are not filing any returns. First 2 months only Challan we are generating, and Challan we are generating. Because we are generating Challan, there is no late filing applicable. Next, whether late fees applicable for delay in furnishing quarterly returns? Yes, the late fees equally apply for delay in furnishing 3B or GSTR-1 as the case may be, but there is no late fees for non-generation of Challan in PMT06. If you are not generated Challan, then you are liable to pay interest and not late fees. Okay, what are the benefits? So I already told it's a less compliance. If you opt for a fixed sum, you need not bother every month what is your output liability, all this you need not compute. You can just go for fixed sum method. 2 months you finish up, only the last quarter you just identify how much is your purchase, how much is your eligible ITC, and you file your GSTR-1 and 3B. So your compliance burden has been reduced almost. Earlier you used to do 3 times in a quarter, now you are doing only once. So that is one advantage. Then section 36(4), if you are opting for a fixed sum, you need not bother each month whether other person has complied with or not. Because if your supplier is opted under QRMP scheme, then you will get a credit only in quarterly. So if you opt for a fixed sum method, you need not bother of 36(4) compliance each month. In the quarterly you can do a compliance, and in the quarter it is very easy to do because the other supplier is also under QRMP scheme. He will file GSTR-1 after the completing quarter, so you will get an advantage there. And so difficulty is for monthly filers, because every month they need to see what is to be credit, what is this credit as per his purchase register. He has to reconcile and he has to ask the person who was not opted, and some person would have opted for QRMP. Again, we need to follow up with the vendors to file IFF. All this burden will be there for monthly filers, but this burden is not there for QRMP. Person who was opted for QRMP, first 2 months straight away will go with just Challan payment. Next, late fees is very less, because MSMEs, they will neglect filing GST return, they will not give proper details and other things, so there will be a delay, and majority times there will be delay in filing returns. If you are under a quarterly scheme, then late filing is very less. For example, you take a scenario where you are not filed any return for a year. So if you are under a quarterly scheme, so what happens? You have only 4 returns to be filed. The late fees is only for 4 returns. But if you are under monthly, so your late filing will be for 12 months. So late fees, penalties, and other things, late fees will be very less. And again, there is an added advantage IFF, where if your customer is forcing you, you can pass on the credit through filing IFF. Okay, we'll quickly run through regarding 2B and what is the best way to reconcile. And again, we'll take another 20 30 minutes for Q&A. Now we'll see what is 2B. Okay. See, 2B is a statement which has been generated on the basis of information furnished by your supplier. The suppliers can be either through GSTR-1, 5 or 6. GSTR-1 is a regular taxpayer. GSTR-5 is non-resident taxpayers. GSTR-6 ISDs. Your own ISD, they can raise invoice on you and they can pass on the credit to you. Once they pass on the credit, they need to file these respective returns GSTR-1, 5 and 3B. Based on that, okay, system will generate your own purchase register in the format of 2B. Okay, the 2B advantage is static. Okay, so 2A and 2B, the main advantages: 2B is static, 2A is dynamic. Okay, if you take an example, June, now we are in February. Okay, January month 2B we generate. Okay, so January month 2B, if you see 2B, in 2B, there will be many other months entries also. For example, if you download 2B of February, January month, there can be some invoice of October, July, January, everything it can be included in 2B. Why this October, January entries will come in January 2B is based on the filing of GSTR-1 by your supplier. Okay. In 2B, the date of invoice is least material. 2B, I repeat, 2B date of invoice is least material. Date of filing of GSTR-156 is important. Okay. In a simple language, if I have to say, 2B will give credit for the invoices for which GSTR-1, 5, 6 filed in the month of January. If your supplier filed 156 in the month of January, the invoices can be for any period. If they filed in January, it will come and sit in your 2B. But not in 2A. 2A, the important thing is date of invoice. Okay. You're filing GSTR-1 in the month of December for last 12 months. Okay. So entire 12 months credit, okay, will come and sit in my January 2B. All the month, irrespective of the date of invoices, all the invoices come and sit in my 2B, but not in case of 2A. 2A, the date of invoice is important. So if your supplier filed all the 10 months GSTR-1 in 1 month, that is December, then the 2A of each month will get updated. In each month, 1 or 2 invoices keep getting updated in 12 different 2As, because for 2A, invoice date, for 2B, date of filing GSTR-1 is important. So suppliers who have filed GSTR-1, based on that you will get a 2B. Based on the date of invoices, 2A will get generated. Okay. The main purpose of generating 2B is to help in compliance with 36.4. What is 36.4? 36.4 rule says you cannot take a credit more than, for time being, 5% of more than 5%. If you have 2B credit, 2B, if you have a credit of 100 rupees and in your purchase register it is 120, how much credit you can take is only 100 plus 5% buffer, 105. That's all. That is, to facilitate this rule 36.4, the GSTN has designed 2B. So once you start following 2B, you can, for a little bit, you can ignore 2A. Why I'm saying 2A, if you start comparing 2A, 2B, so many entries, you will not end up doing any compliance and it will become worsen our compliance and it will consume a lot of time. So what is the best approach? To forget 2A. To forget 2A, take only 3B, 2B. Each month, take 2B. What is the credit? You take the credit. If it is not available, have a separate list of credit for which you are not taken. You check next month 2B. In those credit which you are not taken last month might have appeared in 2B. Okay, because you need not download again last month 2B and check whether it is updating, because 2B is static. So any changes, any compliance of your supplier will get updated in next month 2B. So it is always better to follow 2B because of 36.4 you ignore 2A. Okay. Next very important aspect, which very important aspect which I want to discuss in respect of GSTR 2B. Okay. Once you download 2B, there are two sets of figures. One available ITC and another set of figure is ineligible ITC. Okay. And these two will get directly linked to your 3B, and 3B figures will get automatically updated. You can edit till March. After 1st April, you cannot edit. Till March, you can edit this figure and you can add a buffer of 5%. If there is any mistake, you can do manual editing that is permissible. Okay. Now it is very important for us to understand what is permissible credit, what is ineligible credit as per 2B. Okay. 2B system will designate some entries as eligible, some entries are ineligible. Is a final? No, it is not final, because system will do a preliminary check only in respect of two parameters to say it is eligible. So one parameter is 16.4. What is 16.4? Time limit to take credit, that is 16.4. If your supplier is filed GSTR-1 for the previous year after September, okay, after September of the subsequent financial year, then you are not eligible to take those credit. Okay. In a simple language, if you want 1920, okay, 1920 you purchased something, because of 36.4 you have not taken the credit. That is, the details is not appearing in 2B. Your supplier has filed his GSTR-1 in October 2020. Okay, he filed his GSTR-1 for the month of March 20 in October 2020. The time limit to take this credit is September. Because his filing is written on October, your eligibility comes after you lost an opportunity to take the credit. So you should have taken this credit by September, but your supplier has uploaded in October. This credit will come and sit in October month 2B, and system will classify this 2B as ineligible, because as per the invoice date it is pertaining to 1920, but your supplier has filed in October. Because it is October, you don't have time limit to take the credit as per 16 subsection 4 of CGST Act. The system will classify it as ineligible credit, and it will directly go to ineligible, and it will not be added to your ITC of 3B. That is one. Next, second parameter which system will check is place of supply. Okay, you are doing a business in Karnataka, and your employees will go to Kerala for a visit, and they will stay in Kerala. Okay, and your employee will give company number to the lodge person, and the hotel person has updated your GSTN and he has uploaded in GSTR-1. You know, for immovable property, the place of supply is where the immovable property is located. The other person, the Kerala person, would have charged CGST, SGST with the place of supply of Kerala. Because the place of supply is Kerala, even though is uploaded GSTR-1, that credit will come and sit in ineligible credit in ineligible portion of 2B, and it will not be added to your eligible portion. So first 2B will have two bifurcation: eligible, ineligible. Ineligible is only based on two parameters, one 16.4 and another place of supply. So rest other is eligible portion. Okay. Next question comes whether that eligible portion can directly take credit, because system is only auto populating this direct credit. Because system is doing can I take a credit? No. System is doing only preliminary check with the two parameters. There are so many other parameter rules, 42, 43, 37 and 17.5 blocked credits, and system will not identify all this 75 blocked credit rule, 42, 43 will not be identified by a system. Those ineligibility has to be identified by a taxable person, he has to identify and he has to reverse those credits. Okay. We are just running out of time, so I'll quickly take you to the table where how it is getting linked from 2B to 3B. In 2B, B2B invoices, it is directly going and sitting in 4A file, that is all other ITC. If it is inward supply from ISD, then it will go and sit in 4A4, that is input credit from ISD. If it is inward supply liable for RCM, so there is a lot of students have a confusion in respect of RCM. In some RCM, it will appear in 2A. Some RCM will not appear in 2A. Why this? See, if the supplier, so there are two kinds of RCM which I will not go in deep because it is out of my topic. So one is 9.3, one is 9.4. 9.4 is now presently applicable only for real estate. 9.3 is a specified services. If those specified services you have taken, then supplier will not pay the tax. You have to pay under reverse charge. The best example, GTA or legal services from an advocate. All this has to be paid by a business entity on reverse charge basis. Now you take an example where you have taken a service from an advocate. Okay. There can be two situations where advocate is registered, advocate is not registered. If the advocate is not registered, then there is no question of coming those in 2B because he is not registered, he will not file returns. So you need to pay on your own RCM and you need to take a credit. Take an example of GTA where he is registered. Okay, he is registered for some other purpose. Then he will upload invoices. And while uploading the invoices, he mark it as reverse charge. And if you mark it as a reverse charge, this liability will not add it to his 2B. It will add to your 2B liability to your 2B, 3B. So once 2B gets any invoices which is liable for RCM, first it will add to 3.1B, that is output liability that you need to pay under reverse charge. Then same amount again will get added to your credit, that is RCM credit. So import of goods in the 2B, they are linked now. They are linked to ISGate website. Any import of goods, if you filed a bill of entry with GST number, those credits will automatically move to, that is IGST paid on import of goods will automatically move to 41A of your 3B. So then other reversal credit notes. If there is any credit note, then you need to reverse those inputs. Those credit will automatically comes and sits in reversal. That is 4B. 4A in GSTR 3B is availment of credit. 4B is reversal of credit. Okay. So I already explained first para available credit. This is ineligible credit. So in ITC not available, B2B invoices, the system itself says ITC not available, then you should not take. Inward supply from ISD, if the ITC is not available because of that 16.4 and place of supply criteria, then you should not take. Inward supply liable for RCM. See, it is the inward supply liable for RCM. So even though in this case, this is the inward supply liable for RCM, output you need to pay. But for input, not available because maybe place of supply are 16.4 criteria. So you need to pay output, but you will not get input. In reversal credit note, this is very, very important area. You have to concentrate a lot in respect of reversal, in respect of ineligible credit. Okay. Take an example. Some ineligible credit, ITC, you are not taken. So maybe a purchase of car. Okay. Purchase of car, you are not taken a credit at all. Or it may be covered under Rule 42, exempted supply related to exempt supply. You are not taken a credit. But in respect of ITC reversal, the system will automatically add this ITC reversal to your liability. That is 4B2. It will automatically add to other reversal. Okay. Other reversal, you have to be very careful in while doing 3B, and you have to list out why this credit is getting added, and you have to ensure that you have taken this credit earlier, then only you need to reverse. If you are not taken full credit in earlier, this credit note you need not reverse. So you have to be very careful in respect of ineligible ITC credit note reversal. You have to be very careful. So 2B, what is 2B? What is 2A? Already taken some time and explained. Now we'll just take one or two useful tools which you can use. One of that is VLOOKUP. Because of a lot of scarcity of time, I'll not go into deep how to do VLOOKUP, how you can compare 2A versus 2B or 2B versus books. The second option you have is paid software. There's many softwares like ClearTax, NGST, or TCS softwares that you can use it for reconciling your 2B versus purchase register. But if you don't have paid software, or if you don't have Excel functionality, then what you can go with departments free utility. Okay, there is a departments utility where you can match your purchase register with 2B. Okay, the departments free utility has some restrictions. We'll discuss that restrictions when you can use departments free utility. One, you can match only 2B with purchase register. 2B, you have to download JSN file and you have to import JSN file to software. And purchase register, there is a Excel template. You need to fill that template and you need to import this template. Once you import JSN file and your purchase register to the department's free utility, the utility will do a verification with 7 parameters. Okay, with these 7 parameters, okay, I'll just take you with how that 7, what are the 7 parameters. One second. Okay, actually there is a very good tool which you can try, and there is also refine option. I'll just stop sharing and I'll start. Yeah, can you see this? Okay, see here, matching parameters. This is the department's free matching utility, which matches with 7 parameters. One, it will match your GST number, document type, document number, document date, total taxable value, total tax value. That is total of all taxes and tax advice. So total tax also it will check, each advice also check. And once it matches, it will give full match, unmatched, probable match, and mismatch. So okay, so if all the 7 parameters matches, then it will show that entries as fully matched. If 4 out of 7 or 5 out of 7 is matched, then it will show it as unmatched. Okay, but out of this, if any tax amount is mismatched, then it will show mismatch. Okay, then if it is the parameters are more than this difference, then it will show not in purchase register and not in 2B. So these are the 1, 2, 3, 4, 5 headings. Entire purchase register and 2B it will get matched, and it will show 5 broad parameters: not in purchase register, not in 2B, fully match, unmatched, probable match. Probable match means 1 or 2 parameter is only difference. Out of this 1 to 7, okay, out of this 1 to 7, 2 parameters, 1 or 2 parameters is missing, but all other parameters are matching. Then it will indicate as a probable match, and you can try this. Because of this lack of time, I may not be able to show now. If time permits, we definitely see one example. Apart from this, what you can do is you can do some macros. I'll show one macro which we have developed for doing reconciliation. So this is the Excel file. Can you see the Excel file? Yeah, this is the Excel file. Okay. Okay. So you can see 4 sheets here. First one is purchase rate files, GSTR-2A, ITC Reco, and summary. This the green tabs are input sheets, red tabs are output sheet. Green tabs are input, red sheets are output. So what you need to do, you need to fill these two sheets. 2A, the format is same as system 2A. You can either download 2A, 8A. 8A is in GSTR-9, that table 8A table invoice wise you can download and paste it here, or you can download 2B and paste it here, whatever. And this is purchase register. Purchase register, if you have rate wise, you can use this, or if you have invoice wise, you can use this. Invoice wise also it will work, rate wise also it will work. But in a department utility, you need to have a rate wise purchase register, then only it will match. And in the department utility, you can only compare 2B. You can't compare 8A or you can't compare 2A. You can only compare 2B. That too, you have to download JSON file from department and you need to import to match. But this is an Excel format. The beauty is it just compares two set of data. For example, it is a purchase. If you want, you can paste 2B here, 2A here. So it will match this two. This Excel tool will only match two sets of data. For an easier reference, I have mentioned purchase and 2A. But inside data, it can be anything. It can be 2B, 8A, or it can be 2A and it can be TD. Any two sets of details, you can paste it. And you can come to auto reconciliation. Just click reconciliation, which matching status. Once it's completed, it shows how much time it has taken to match. Once it's matched, it will show statistics. The statistics is now you have two sets of data here. It is purchase register, it is 2A. Once it comes to ITC, now it will come in one single line. That is, left side it is as per books, right side which is there in the black is as per 2A. Okay, in each line we have given matching status. Okay, what you have to do, you have to pick and you have to select fully matched. So fully matched means there is no difference between purchase register and your 2A. Everything is matching. And date mismatch. So in date mismatch, where tax amount, party, everything, name, everything is matching, but date, the major reason may be invoice date might not be updated in Tally. You would have updated on date of it. So it will be a minor mistake which you can ignore, which is specifically identifies date mismatch, which probably you can ignore. Invoice and date mismatch. So tax amount, GST number, everything is matching, but invoice number and date is not matching. That maybe because the slash and other things you can manually check and ignore. And invoice number mismatch is a major problem, because in 2A they have put slash 2021, we would have accounted only 1506. If you know this pattern in a particular person and you know this mismatch, what you can do, you can select that person and you can select here invoice number. One option is there. Next, invoice number for reconciliation. So here you can say invoice number and slash 2021, and you can copy paste this formula and then again you can run. Once you run, now it will consider invoice number for reconciliation parameter and not the original parameter. Okay, and according to me, date mismatch, full match, the invoice and date mismatch, and the invoice number mismatch, these four can be ignored because tax is anyhow it is matching. It will not create a much of issue, but if it is really required, you can look into. But these four we usually ignore. What we concentrate is only on this four. Not into A, only into A. You can select not into A. So if it is not into A, right side will be blank because it is not into A. Only left side it will have entries. You can ask these customers to update and only into A. So purchases will be blank, access amount is blank, only right side amount will appear. Okay, so here in the left side everything will be blank, only we have updated GST number and party name. That is very good advantage because if you want to match one particular person, then it will be difficult unless it is updated. So what we have done, we have updated here. so that if I select a filter rate, whether it is there in 3B or 2A, it will come in line wise. And next aspect is tax mismatch. This is very important. You have to pay a lot of attention to tax mismatch. Why? Because GST number matching, invoice number is matching, but tax is not matching. Why? So in this filtering, we have identified a lot of wrong credit taken by a client in the space when we do GST audit. See, in this case, see, actually in 2A it is a CGST, SGST, but the client has taken IGST. All this mismatch we can easily identify with small macro on this tool, and this tool I have developed, and this can be downloaded freely, and the link is also available, and in the chat box also I'll put a link. And you can note down this URL, HTTP. If you type this URL, you can download those that Excel file, and you can do a reconciliation. Also, departments utility is also very good. We'll also go through one small tool, which is a plugin for Octa plugin for Chrome. Last tool we'll see, because why this tool is important. Because when you do an audit for GSTR 9 and 9C, you'll keep downloading multiple files. Once you keep downloading multiple files, it takes a lot of time for you to download. So because that, there is a plugin. How to use that plugin, I'll show you how to. Just go to Chrome and then search for Octa GST. Once you enable that plugin, Octa GST in your browser, you can you get a small icon in the browser. I'll just let me show that, so I think it will be useful. Yeah, I think it is visible now. So this is the small demo of Octa tool. Yeah, just see, once you log into the portal, you go to return dashboard. So a small plugin which is visible on the top right side. Left side, you'll get an option GSTR 3B JSN for 18-19 years. So each year you need not go and do a Excel for 18-19. You just click and refresh and download. So entire 12 months Excel will automatically get downloaded in a click of a button. You need not go 12 times and do that. And all your download can be done freely from this plugin. So this plugin will definitely add some value, and it will save your time. Okay, so yeah, okay, so that's it from my end. Thank you, Panindra and Vikasa, for giving this opportunity and sharing some useful tips and knowledge from my end. Now open for question and answers.
Yeah, actually, most of the questions you have covered, Mylar. So we'll take questions.
Yeah. While doing my deliberation, I covered most of the questions.
Yeah. So few questions.
Challan and successful basis and message showing as follow. Interest should be level as per the in case of payment made through other than 35% Challan. How is this interest is levied? Okay, so this also I covered while deliberating. See, once you select,
might be pop-up it is coming, I guess. So
yeah, pop-up it is coming. That's what I'm saying. Once you select this 35%, there is no issue. If you are selecting any other basis, then I told it's a system generated. So system will not identify tax payment for quarterly filers. Monthly payment for the quarterly filers, system will not be able to understand. So because of that, they may create a interest demand liability. But if your paid it and if you are not utilized it. So there is one more circular which come in your benefit, which says if you have a sufficient cash balance, sufficient ITC credit, then you need not make a payment, because once you make the wrong payment date, that means you have a sufficient cash balance and sufficient credit. So technically, it should not create any payment.
Okay. So, and actually this 35%, it will come from next quarter, and this quarter only 100% of the previous month, it is correct.
Correct.
Yeah. Okay. So next question is from Kumar. Sir, if supplier opted QRMP and GSTR-1 quarterly and not opted IFF, when will customer get credit? Means he is asking if he has not filed IFF.
Yeah, he has not filed IFF, because if you have filed IFF, it will travel through 2B of the customer and customer will get in the credit in the same month. Because he has not filed IFF, he has filed GSTR-1 after completing the quarter, that is before 13. So after after filing Q1, the credit will flow.
Last quarter
that, yeah, till that the customer will not get a credit. To overcome this difficulty, they have introduced IFF.
Okay, so Ganesh is asking, how can we opt out for QRMP of last quarter, Jan to March? So it is defaulted.
Jan to March, you can't opt out now, because you should have opted out before 31st January. So January was the last date for you to opt out. Because you are not opted out, you don't have any other option. You have to complete this quarter with QRMP scheme itself. But if you want to opt out from April, right now there is they have enabled, because this option is available from 1st February till 31st April. So you can right now you can log into your portal and opt out for April to June quarter.
Sir, what is the last date of opt out for last quarter? Okay, it's already done.
The same thing. So I already answered.
So can we shift to 35%?
Yes. So the circle is very clear. In 1 month you can go for 35%, and another month you can go for self-assessment. There is no problem. But if you go for second month self-assessment scheme, first month liability also to be taken care. Okay. For example, your first month you are saying you are paid through 35%. Fine, there is no interest liability. Second month, if you are going for self-assessment basis, second month assessment cannot be standalone second month. It should be cumulative, including first month's liability.
Okay, so actually here one more question, what it is coming, switching over between fixed sum and then self-assessment is possible. But first month liability is there, they have paid. Second month they have purchased excess, so there is credit. And while filing quarterly, all the 3 months put together, it is coming a refund only. There is no payment only. But what happened to the one which is already paid in first month?
No, for first month you can claim a refund after filing 3B. Or if you don't want to claim the refund, you can carry forward that cash balance to next subsequent months.
No. So January month they have made payment. That is actual basis only they have made payment.
Correct.
So self-assessment. So they are supposed to pay liability. They have discharged through cash. So February month and March month. So they have excess credits. So they need not have to pay. And when we combine Jan, Feb, March, all the 3 months put together, so it is coming refund only. But when we compare only month on month basis, first month liability is there. So now what is the solution? Future credits can be used for January month.
No, in the first month you don't know that next month you will make a purchases. So my first month either you have to go with self-assessment basis or fixed sum basis. First month you can't avoid. First month you need to pay. Second month, because you have a purchases on self-assessment basis, you need not make the payment. But first month you need to make the payment. Otherwise, interest will attract. So based on future purchases, you can't stop paying cash now.
No, so what about when they are making or when they are filing GSTR 3B quarterly? At that time, calculation of it will happen. So first month payment and the second 2 months credit, like that only it will happen.
I got into your question. The PMT 06 is just depositing cash into your cash ledger. That's all. So once you deposit that balance will lie in your cash ledger, you will file monthly 3B just how you filed previously. You file 3B and you ascertain what is the cash portion that you need to discharge. That cash portion can be used from your cash ledger, which is already deposited in 2 months. If it's a shortfall, third month you will make the payment. Because in your example, there is no requirement of cash itself. Entire 3 months put together. So in this month, you will pay everything through ITC, and that cash balance will lie in cash ledger itself.
That can be utilized for next quarter.
For next quarter, or you can claim a refund.
Okay. So next question is from Kumar.
It is
Sir,
just
where
a
can we
generation
find
of.
payment?
Yeah, it is just a generation. Create Challan option is available. You just create a. If you click on create Challan, it will give 2 options. Fixed monthly payment for quarterly finance or other payment.
But in portal it is not mentioned PMT06. That's all.
Yeah,
Once
yeah.
we generate Challan, it will come.
Correct. I think majority. I think all the questions is taken care, right?
I think this is also covered. So reverse charge credit will not reflect in 2B.
Yeah, reverse charge credit, I already explained there are 2 kinds of reverse charge 9394. 994 is applicable only for real estate for the time being. And in respect of 93, there are 2 kinds. If your supplier may be registered, unregistered. If the supplier is registered, then he will upload in his GSTR-1 or IFF, in his GSTR-1 or IFF as reverse charge. Once he upload that liability will come and sit in your 3B. If the supplier is unregistered, then it will not come in your 3B. You have to add manually liability and you have to take a credit.
Okay.
If it is eligible.
Okay.
Sir, in IFF of February month, can we upload January month B2B bill, which we have forgotten? IFF of January month.
Yes. You can upload. There is no such restriction. Even
but only
previous returns also you can update. There is no issue. But
only thing
overall
is like
limit
before
of 50
13th.
lakhs. Yeah, before 13th, overall limit of 50 lakhs.
Okay. Last question. Sir, for QRMP, we have payment in quarter and we pay through self-assessment in both Jan and Feb related to this month's liability, and March month payment is there. Is that be assessed and paid in advance?
No, it will not be assessed and paid in advance. It is not advance tax. First 2 months, as per self-assessment basis, you made the payment. March month, whatever is there, you have to identify and you have to actual basis, including shortfall or excess of Jan Feb, you can adjust and you can make the actual payment for the month of March. That is only after completing the quarter.
Okay.
Okay. So almost finished it.
Sir, it's mandatory to file table 6A export invoice to be filed before 13th of the succeeding month.
See, if you have an export invoice, you can file it. If you don't have an export invoice, you need not file a nil return. You can just ignore it. So it's a benefit given to you because IFF does not have table 6. IFF has only table 4. And if you have exporter of goods, so it requires you to upload this and it match with ISGate so that customs can give refund quick. So it's a benefit. If you have, you file it. If you don't have, you need not file nil. You can just ignore it.
Okay. So I think only this many questions, and it was really wonderful session, like covering in-depth analysis of QRMP scheme and also effective ways of doing 2A reconciliation, what 2A, what is 2B, and also you have explained us your tool, what you have developed. So it will really add value addition to all the articles if they really use it. So within no time, 2B reconciliation will be done, and hats off for your tool. So which will really ease off the complaints burden of the students, and especially students are the one who will be doing this
Really
not
doing this
all
work.
the offices work. So hope everyone will get benefited out of this tool, and especially one more, the Octa GST tool. So to download also, normally it used to take 20 minutes for each. Even that also you have explained. Yeah. So on behalf of Bangalore Branch, I thank you once again for your valuable time, Mylar, and everyone enjoyed the session. And I quickly
Thank
call
you,
upon
Puneet.
Patil to expresses gratitude and feedback for this session.
Yes, sir. Good evening once again, sir. It was very wonderful session, sir. What exactly you had? You had done a fantastic job, sir. Because while you are if we enjoy this session, so we need not to refer other material, or we need not to go to other YouTube videos and all. So it is most enough for us to doing all those things, sir. Absolutely, your tools are very useful and then very informative, sir. And definitely, your adds up to your valuable time for sharing with us, sir. Thank you, sir. Thank you so much, sir.
Thank you, Patil. Thank you, Pani. Thank you. Bye.
Yeah, thank you, Anand.
Bye.